Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, let's get back into the precious metals and crypto world because there's a lot of movement taking place and there's something that doesn't quite seem right about what's going on. I'll explain here in just a moment. Before we get started, if you're not a subscriber, please do so because when you do, it helps out the channel and I certainly do appreciate it. If you're thinking about buying gold and silver or any other precious metals for that matter, head on over to our friends at Money Metals Exchange. The link is down below in the description. When you purchase over there at Money Metals Exchange, you will now be automatically entered into a chance to get free giveaways. This month, you'll be automatically registered to be one of 3 people who will receive 10 ounces. That's 10 silver eagles each. So head on over to Money Metals, make your purchase, and automatically enter to win. For those of you who are unaware, I do have my own webpage. I can be found at Pimpy's News Network. Over here, I do post videos that I can't post on YouTube without getting in trouble. I also have my own Facebook group called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. So come on over here and join us. It's free to do so. I can also be found over here on Twitter, MeWe, YouTube, Odyssey, and now I'm on Rumble. For whatever reasons, my videos are not showing up on my channel yet, but I can be found just by going to the search button and typing in Pimpy's Investment Chat. And my videos will pop up for you to check out. If I get kicked off YouTube or I get suspended on YouTube, you can find me on any other one of these social media platforms. It's a new month and now a new chance to go ahead and win 10 free ounces of silver from Money Metals. All you have to do is go down below and click the link. It is moneymetals.com/Pimpy, or just follow the link. It'll take you right to where you need to go. Make any purchase over there and you're automatically entered for a chance to win 10 free ounces of silver. 3 people will be chosen. So both cryptos and precious metals aren't moving the way we thought they would, especially with the announcement of First Republic being bought, of course, by Jamie Dimon and JP Morgan. With the news of all these banks collapsing, nobody should be surprised. You would think that people would be rushing out of the banks and moving into what they consider safe havens. Now we see a lot of movement on the gold and silver market. It's just not reflected in the price, unfortunately. I think they're trying to discourage people from moving over into the precious metals. Now the feds are talking about doing another rate hike. If the feds do another rate hike, that's not showing very much confidence in the economy. I know it's supposed to show you that, but that's not how it's going to reflect. You're going to see more people in foreclosure, people not using their credit cards anymore. Anybody that has anything out with a loan, your interest rates are going to go up. It's going to really prevent people from shopping and doing anything out there that would be considered entertaining just because they won't have the money to do it. It's surprising to hear that the feds are going to raise their rate again. It will have an effect on precious metals as well as cryptos. You'll see them take a hit a little bit, but then they'll rebound. So you can see cryptos in the red today. You got Bitcoin at $28,014. Ethereum still above the $1,800 mark at $1,829. XRP is at 46 cents. Cardano's at 38 cents. Dogecoin is at 7 cents. Polygon is at 95 cents. Solana is at $21.87. Hex is at 4 cents. Polkadot's at $5.65. Litecoin's at $86.67. Shiba is at 4010. So people are frustrated. They're fed up with cryptocurrencies. When I talk to people, they're just saying there hasn't been much movement for a long time. So I remind everybody, this happened before. Either you haven't been into cryptocurrencies that long or you just don't remember or whatever reason. This has happened before. For those of you who probably don't know this, Bitcoin around 2017 it really started to run up. And over here it reached about 19,000. Everybody was excited and then it just dropped in value. So it got down around here and what is this? June of 2018? So you're looking to almost June of 2020, 2 years later. It was sitting around this level, just going up and down before it took off like a bat out of hell. So this is just a same pattern, I think. It's just running horizontal, waiting for a breakout. Will a breakout happen? I'm not sure. With everything going on, it's hard to say. But it's been this way before. People had to wait a couple years before they woke up to a big surprise and Bitcoin really took off. Terra Luna's at 3010. Satama, man, took a serious hit today. Now, all the cryptos took a hit, but Satama, it dropped down pretty low. But again, every little movement with Satama, it looks dramatic. But even so, it's at 2012. I'm still just hanging on to mine. Gold was in the red today. It is now at $1,982.50. People started panicking a little bit and were hitting me up. And I said, I'll just ignore that. This shouldn't be surprising to people. But seriously, ignore it. I know we go to the paper price and we look at it and we talk about it. But don't let it have an effect on what's going on. Even if it drops all the way down to 100. Like I said, understand that there's an agenda behind what's going on. And they're doing this just to scare people out of precious metals. But I wouldn't fall for it if I was you. Silver's at $25.85. Finally below that $25 mark, but not by much. So this is kind of what I was talking about. Bitcoin set new record of daily transactions the same day the U.S. government quietly engineered a bank buyout. It's not the government's responsibility to do bank bailouts. They're using tax dollars to engineer the quiet takeover of all the banks by just a handful of banks, and they're using tax dollars to do it. There's so much distraction going on in the media, and the news cycle turns so quick that people aren't paying attention to what's going on. So this isn't good, but we did speak about it, that JP Morgan and Jamie Dimon were behind the collapsing of our banking and financial institutions. So on Sunday, as the government worked behind the scenes with two major banks to engineer the latest financial rescue plan. So here's how capitalism works. You start a business, you try to work the business, you try to become successful. If you're not successful, the government isn't supposed to come along and give you money to help you. Your business fails. Now they're going to tell you that, oh, this is good for the American people. This is helping the American people. We had to do this to spare our economy. They're just lying to you. They use fear tactics so that we'll accept what they're doing. They're using taxpayer dollars to organize all these mergers and slowly push us into a direction we don't want to go. And they just keep telling us, well, it's for our good. It's not. You got to let them collapse. So what? Let the banks collapse. They should have did that in 2008. There are more confirmed transactions than it ever had in a 14-year history, beating the previous record set during the 2017 bull run. Today, JP Morgan Chase has acquired First Republic after the distressed bank's assets were seized by regulators, becoming the second largest bank failure in U.S. history. So that is having an effect on the market. But this should be causing cryptocurrencies and precious metals to go up even higher in the green, but it's not. So as usual, it is manipulated. So they're saying here that Bitcoin is surging in transactions, but you don't see no change really in the value of Bitcoin. While the two events, Bitcoin surge in use and the latest example of U.S. financial calamity, are not exactly related, the timing here does suggest something about the future of the crypto industry and Bitcoin's possible place in the ever more dysfunctional economy. Don't fall for this. They have no intentions on letting cryptos survive. If they do, that would be a miracle. They don't want anything competing with the central bank digital currency, not unless they control it. At the same time, regulators and legislators are working to lessen crypto's inroads into a wider economy. The private banking sector is showing itself to be unable to manage itself. That's a good example right there of why the government won't allow cryptos to become too powerful. So the government took over SVB as well, and there was no reason to do it. They didn't have to bail them out. They would have been just fine. That's the same thing that's happening with First Republic. The government literally is just taking these banks away from the owners, is what it is, claiming that they didn't have any faith in them and that the FEC had to jump in to do something or else the whole world's economy would collapse. It's just a lie. It's bullshit. They're just trying to expedite whatever this plan is that they got going on. So to help bolster confidence in these bigger banks, which they want everybody to feel comfortable to be in, because, you know, once you're in there, then sucker, then they could just spring the central bank digital currency because you don't have a lot of options left over. So to kind of butter the muffin, so to speak, make it look more enticing, the FDIC has an idea to avoid bank runs. The FDIC recommended increasing the amount of deposit insurance after failures of several banks due to panicked depositors. Where's that money going to come from? You don't have enough to cover everybody as it is. And now you're talking about increasing the insured amount? If they're going to make the suggestion that they increase the insured amount, then that isn't to benefit you. That's to benefit them. Keep that in mind. The banking system should increase the amount of deposit insurance provided to customers by giving business accounts more coverage. See, by giving business accounts more coverage. business accounts. Not for the people. Business accounts more coverage in the effort to avoid future bank runs, the FDIC said on Monday in a report. So the same people that are put there to protect us, to watch over everything, are the same people who are attacking us, making these types of decisions that help the rich and the wealthy and the bankers while screwing over the rest of us. That's why reading the wording is so important. I love how they say, oh, this is important. This is for us. You know, it's for you people. But we're going to increase the amount of coverage that we give to businesses, not the people, but the businesses. The recent bank failures shed light that several banks have a large amount of depositors that are uninsured, which led to a massive bank runs as customers were fearful that they would only receive a portion of their money. But that's the truth. The FDIC currently insures deposits up to $250,000 for both customers and business accounts. Well, if you want our confidence to be more in the bank, then why don't you increase the customer side and not the business side? The FDIC made 3 recommendations to reform the current deposit insurance system that said it favored targeted coverage, which calls for offsetting different deposit insurance limits across account types. Well, let's see what they have in mind. The FDIC believes targeted coverage best meets the objectives of deposit insurance financial stability and depositor protection relative to its cost. So when everybody was on even playing field, supposedly, then they pay off stuff like derivatives first, and then they go through and there's a priority on who they pay. So to make sure that you absolutely get nothing, they're going to increase the business side so they get more money, and that will assure the people that you'll get nothing. Any changes to deposit coverage amount would need congressional approval. The FDIC did not set a timeline for any potential actions. So I was hoping it would say what the amounts were going to be, like how much for each tier, so we know. But all this is, again, they're trying to make it sound like they're protecting the customers. They're not. By increasing the amount of coverage that the businesses have, they get more money back because they're taking the money out of the customers' pockets. They won't say it that way, but that's exactly what's happening. Because again, when people get paid back their money, it goes based on priorities. And the business people will get theirs first before us. But if you increase their amount, that means they get more money. That means there's less money inside the insurance pool. Anyways, that's it for now, you guys. I appreciate you tuning in. I look forward to your comments, and I'll get back at you later. I'm out.